What we are also seeing is that some larger Swiss institutions are interested in becoming validators themselves of XDC. This makes sense because they're already running significant IT infrastructure, and becoming a validator gives them direct participation in the network and deeper understanding of the technology. Also the ability to earn validator rewards while supporting their clients' staking needs.
Hello, everyone, and welcome back to another XDC Mena Podcast, where we talk about the future of blockchain and technology. I am Rebecca, your host. Joining us today is Li Maor, who leads XDC's initiatives in Switzerland, one of Europe's most influential hub for crypto, finance, and regulatory innovation. Li works closely with institutional stakeholders, industry leaders, and innovation regulatory circles, making or helping position XDC into a highly strategic market for digital assets and tokenization. Let's get started. Li, welcome to the podcast. Welcome to Dubai. How are you?
Great being here. Thank you, Rebecca. Thanks for having me.
Perfect. So before we dive into today's topics, Li, please tell us more about yourself. What drove you to blockchain, and especially your role at XDC Network?
Yeah, amazing. Thanks. So good to be here in Dubai. Thanks again, Rebecca, for hosting me. My path into blockchain was, although surprisingly, actually not that complicated. It was quite natural, I would say. I started as an IP lawyer, intellectual property lawyer at the World Intellectual Property Organization, which is a UN agency in Geneva, working on international IP negotiations and innovation ecosystems. That experience showed me how innovation scales, but also how it needs the right financial infrastructure and regulatory framework to succeed eventually. That what drew me into the Swiss traditional finance, where I was working about Julius Baer, and then later on managed over $1 billion book of digital assets in Bitcoin Swiss. What I kept seeing through this journey was a gap. Institutions wanted to explore digital assets, but most blockchain projects didn't speak their language or understand their needs, requirements around custody, compliance, and risk management. When I learned from Ziv Kainan, who is XDC's head of markets and partnerships, about what we do in XDC, what stood out was the focus on real utility, trade finance, tokenization, institutional grade infrastructure, everything that we'll discuss a bit later today. Switzerland is the perfect market for this because you have sophisticated financial institutions that are genuinely curious, but they need solutions that fit into their regulatory framework. That's exactly what I'm working on building back home in Switzerland now with XDC.
Perfect. It's great to have a legal expert finally at the podcast, and incredible journey that you have. And so, yeah, Li, thank you also for giving us a clear picture of what initiatives you've been doing in Switzerland. Now, let's zoom into Swiss market. So according to Crypto Valley Association, Switzerland hosts over 1,100 plus blockchain companies and crypto companies. So with this type, of activity and institutional presence in Switzerland, what trends do you see among institutions and enterprises in terms of blockchain adoption?
Yeah, so it's true, Rebecca. Switzerland is one of the most crypto old and mature hubs, but it has also been rather conservative in adoption. Swiss banks are not first movers by nature, but that's exactly what has changed and why the current momentum is so significant and why it is important that XDC is now with foot on the ground in Switzerland. the conversation has fundamentally shifted. 3 years ago, Swiss banks were asking, should we look at crypto? Actually, I remember a discussion that I had during my time in Julius Baer around that with one of the directors of Julius Baer. Now, banks are asking, how do we integrate digital assets into our offerings? Now, according to 2024 Blockchain Pulse survey from the University of St. Gallen, nearly 60% of Swiss banks have developed or are developing currently blockchain strategies, and more than 60% that already have cryptocurrency offerings are expanding them currently. What's fascinating is this isn't just talk. We are seeing real momentum. What I'm seeing is three main areas of focus. First, there is explosive of interest and actual growth in tokenization of real-world assets. The tokenized asset market is projected to grow from around $600 billion today to almost 19 trillion by 2033. That's more than 50% compound annual growth rate, according to the BCG and Ripple's recent report. Swiss wealth managers see this as a way to offer their clients access to previously illiquid assets with better transparency and fractional ownership. Second, ETPs, exchange traded products, which is also something we'll discuss later on around with XDC. ETPs have become critical for a specific reason. They allow banks to offer digital assets exposure without building entirely new infrastructure. For wealth managers who want to serve client demand in digital assets but are not ready to become crypto custodians themselves, ETPs are the perfect match. The custody, the compliance, the operational complexity, all of that sits with the ETP issuer, like a 21 Shares, for example. The banks simply distribute their product through their existing brokerage systems. It's low risk, high compliance, and fits seamlessly into traditional portfolio management. But what's really interesting is where we are now seeing major banks go beyond just offering ETPs. They are building direct crypto services. And this is true now. For example, a bank, PostFinance Bank, they became the first systematically important Swiss bank in 2024 to offer direct crypto trading and custody to more than 2 million of retail customers. So we are seeing two parallel tracks, I would say. ETP for institutions that want exposure without operational complexity, and pioneering banks like PostFinance, or cantonal bank, and regional cantonal banks, building comprehensive in-house crypto capabilities. Both tracks create massive distribution channels for XDC, whether through regulated ETPs or direct institutional adoption. Third, there is a serious exploration of staking and yield generation. Just now, recently this month, a FINMA regulated company partnered with another institutional grade staking services to offer them to Swiss banks. Staking services are being becoming accessible to millions of clients. Private banks are under pressure to find yield for their clients, and they are starting to understand that staking on proof-of-stake networks can offer attractive and transparent returns if done with proper custody and compliance framework, which is also what we will discuss, how XDC can provide interesting solution in that area. So the key is that Swiss institutions do not want to be pioneer, taking regulatory risk, obviously. They want proven infrastructure with clear legal treatment, and that's creating real opportunity for XDC, which prioritizes institutional readiness.
I love framed, the progress from 3 years ago of saying, should we touch crypto? And now they say, how can we participate to crypto? And interesting takes on tokenization, ETP, and also staking. Now, let's stick to the institutional theme when XDC and ETP got listed to 6 Swiss and Euronext. It was a highly monumental, achievement for the network. So how do you think this listing, strengthened the positioning or visibility of XDC among Swiss institutional players?
Yeah, so first of all, just to mention, we did list our ETP with 6 Swiss digital Swiss exchange and Euronext, and we're soon going to ETFs also to allow US-based clients to get exposure to ETP products, to XDC products. When I would sit down with a Swiss private bank or family office introducing a new crypto-based investment product, the first question always, is this regulated? How do our clients access this? Now we can clearly say XDC has regulated ETP on 6 Swiss exchange, which is the same exchange where they trade Swiss stocks and bonds. That immediately changes the conversation. What's important to understand is that Swiss institutions trust the local infrastructure. 6 isn't just an exchange. It's a symbol of Swiss quality and regulatory compliance. We know in November 2018, 6 listed the world's first physically backed crypto ETP. Our ETP, XDC ETP, listed there, managed by 21ers, who were, by the way, those that launched the first in 2018, gives us instant credibility. Practically, this means wealth managers can now offer XDC exposure to their clients through their existing custody and brokerage accounts. There is no need for clients to set up crypto wallets or deal with exchanges they have never had before. It's seamless integration into their portfolio management systems. But here is what really matters. The ETP listing fundamentally changed how institutions perceive XDC. We are regulated digital asset with institutional infrastructure. That opens entirely different conversations about partnerships with bank tokenization projects, validator node operations. We have crossed the credibility threshold, I would say. And that credibility compounds, and I would mention here very quickly, Circle's decision to launch native USDC on XDC. That is another validation. USDC, the largest regulated stablecoin, is the institutional stablecoin of choice used by major banks and financial institutions globally. Circle doesn't launch on networks without serious due diligence. Having both a regulated ETP and native USDC on XDC sends a clear signal to Swiss banks. This is institutional grade infrastructure.
Great insights once again, and it ties nicely into, regulatory foundation, which Switzerland is known for. Now, continuing on the regulatory, according to FINMA, Switzerland was one of the first country, to fully recognize digital assets through the 2021 DLT Act. Now, with this regulatory clarity, how does the Swiss market, shape your conversation in terms of staking, ETP, or other on-chain financial instruments?
Yeah, exactly. So, Rebecca, as you said, Switzerland regulatory approach is actually perfect for what we have built in XDC. FINMA, the Swiss financial regulator, has created clear frameworks without sacrificing innovation. They have said, if you want to tokenize assets, here are the rules. If you want to offer staking, here is what we need to see around custody and disclosure. This clarity is powerful because it lets institutions move forward with confidence. Just this September, 3 Swiss banks, UBS, PostFinance, and Signum, successfully completed the first binding cross-bank payment using tokenized deposits on public blockchain. Was not a pilot, it was a real. When I talk to Swiss banks about offering staking services, we're not having as much as nice would that be, philosophical debates anymore, or not at least only philosophical debates. We are having operational discussions about custody solutions, how returns are reported for tax purposes, and client suitability requirements. For tokenization specifically, Switzerland recognized tokenized securities under existing security laws, which means institutions don't need to wait for brand new legislation. They can start tokenized bonds, fund shares, or real estate using proven legal structure. The city of Lugano, for instance, where we just hosted our panel 3 weeks ago during the Lugano Finance Forum, they just issued their fourth blockchain bond, and we're seeing banks like UBS issue tokenized bonds through the Swiss digital exchange. Where XDC fits in is our architecture. Swiss institutions care deeply about things like transaction finality, network stability, and regulatory compliance feature. XDC's delegated proof of stake consensus, our focus on KYC capable validator nodes, and our track record in trade finance applications. These align perfectly with Swiss requirements. So that's a huge shift.
Great points once again, especially that Switzerland is active, participating into regulated digital assets. Now, Lee, continuing on the banks, as you mentioned earlier, banks like Julius Baer, Signum Seba are having interest in staking products. So what do they focus on, and how do you think XDC meet those expectations?
Yeah, that's an important question because it touches a few items that are not always considered when we speak about staking. So when Swiss private banks look at staking, they are not thinking like retail crypto investors. They have three primary concerns. First is custody and security. So their clients are high net worth individuals and family offices with serious security concerns. They need institutional grade custody solutions with proper insurance and audit trails. Swiss banks are now offering institutional grade staking services with built-in risk mitigation mechanisms. XDC's validator network structure actually supports this well. Regulatory classification and tax treatment. Banks need absolute clarity on how staking rewards are treated. Are they income, capital gains? How do we report them? Switzerland has been progressive here, generally treating staking rewards as income, which also gives banks a clear framework for client reporting. Major institutions now offer regulated staking services to their clients because of this clarity. Third is yield stability and transparency. And this is where many blockchain networks fail institutional requirements. Banks need predictable returns they can model or explain to compliance committees. They can tell a family office your staking yield might be between 5% to 15% depending on network activity. That doesn't work in wealth management. And XDC validator rewards come from a defined rules-based schedule, not trading speculative loops. Yield can vary still with network conditions, but the mechanism is transparent and predictable enough for banks to model. This makes XDC staking closer to an infrastructure product than a typical crypto yield strategy. What we are also seeing is that some larger Swiss institutions are interested in becoming validators themselves of XDC. And becoming a validator gives them also the ability to earn validator rewards while supporting their clients' staking needs.
Great overview. Again, XDC is well positioned to meet the demands of banks when it comes to regulated staking. Yeah. Now, Lee, for the final question, what should we expect for XDC in Switzerland in next 12 to 18 months?
I will speak roughly about three major opportunities area that I'm really excited about. First is trade finance digitalization. Switzerland is a global hub for commodity trading. You have major trading houses, Glencore, Trafigura, Mercuria, moving billions of dollars in goods around the world. The current system involves massive amount of paperwork, letters of credit, and settlement delays. XDC was literally built for these use cases. We're aiming soon in Switzerland at engaging in active conversations with several Swiss-based trading operations about piloting blockchain-based trade finance solutions that could reduce settlements times from weeks to two days. Sorry. The second one is tokenization infrastructure for Swiss banks. To tokenize, so several banks are exploring how to tokenize traditional finance instruments like bonds, structured products, fund shares. And XDC's architecture is purpose-built for this. And having proven use cases in trade finance gives us credibility that pure DeFi protocols don't have. A third is the Swiss family office ecosystem. Switzerland has an extraordinary concentration of family offices managing multi-generational wealth. These families are sophisticated, patient investors who are starting to explore digital assets as part of portfolio diversification. They want infrastructure plays with real utility. XDC's focus on institutional adoption and real-world use cases resonates with this mindset. What ties all those together is Switzerland's special position as a bridge between traditional finance and digital innovation. And this is, as I mentioned, my also personal motive or drive coming originally from the innovation ecosystem, moving to the traditional finance system in Switzerland to cryptocurrencies offerings. We are trying to upgrade it, make it better, or even having other players participate. And that's a message that's landing very well back home in Switzerland.
Very exciting indeed. And thank you for sharing us how the Switzerland blockchain space or ecosystem is evolving. So yeah, Li, in case someone from Switzerland or in Europe is watching this podcast and want to connect with you, want to work with XDC, what's the best way to find you?
So absolutely, first, I'd encourage anyone interested in XDC institutional work in Switzerland to connect with me directly on LinkedIn. I'm always happy to have conversations, theoretical or not, with financial institutions, family offices, or partners exploring blockchain solutions for trade finance and tokenization, where you can explore our documentation, see our live network statistics, and learn about real-world implementations. If you're a developer or technical team, xdc.dev is your starting point. Our developer community is increasingly active and supportive. We are at an inflection point in Switzerland. The regularity clarity is there, as we mentioned. The institutional appetite is finally there. And the infrastructure that was always there for a few years now is maturing rapidly. Whether you're a bank exploring custody and staking, a trading house looking to digitize operations, or family office seeking regulated digital asset exposures, now is the time to engage seriously with this technology. We are focused on enterprise-grade infrastructure for institutional use cases, trade finance, tokenization, and financial applications that require speed, compliance, and reliability. If that aligns with your needs, let's connect.
Li, thank you once again for being part of the podcast.
Thank you, Rebecca. It was a pleasure.
You're welcome. And yes, all of the links that Li has mentioned, it will be placed under the video description. And aside from the websites, please follow us on our official social media handles. So I'll see you on the next episode. Keep learning, keep exploring.